won't count it against you. Okay.
Well, I didn't know if you were running it like CE.
Okay.
Is there a test at the end?
There is a test if you are not on live. We will do a short quiz for both days if you're not able to be here the whole time, or you're not able to do one or the other, because it is really important that we get this information to you and that you hear it. And we want to make sure that you don't miss out.
So that's the silver lining, to be with you for 2 hours.
Yes, and it's not just going to be me. So why don't we go ahead and get started? Thank you guys all for joining. Today, we are talking about E&O and risk management. We should really do this yearly. Last year with the pandemic, we didn't get around to doing one as robust as we probably need to year in and year out to keep all of us on our P's and Q's to make sure that we are paying attention to what's happening out there in our industry. It's really our time to share with you things that you need to know, things that you need to remember, and things to be careful about. I'm Tiffany Johannes. I'm the broker in charge of our Ballantyne office. If you guys don't know me, I'm not going to speak the whole 2 hours. And when I get started, I kind of laugh all the time because Sandy McAlpine posted something a while back ago, and it said, the most fun realtors. And my name was on the list, and I kind of laughed. I was like, yeah, when people listen to forums and talking about risk and E&O, I doubt they're thinking I'm the funnest person around. But with that being said, let's get started. I'm going to tell you a little bit about what we're doing each day, and then I'm going to roll into the first topic. We have guest speakers coming on each day to talk about different topics, so it's not going to be the monotony of me speaking. So today's E&O is going to be about company policy highlights. I'm going to do that for about 30 minutes. And then our Travelers Insurance, Katie Marsh, as well as one of our real estate information and insurance solutions persons, Annie, is going to join us to talk about what's covered in E&O. Then Karush is going to join us and talk about property management and commercial departments. Then we are going to have Byron King from South Carolina join myself and Karush to talk about forms and documents and things to be aware of, licensing boards and such. And then Scott Tony, our very own Scott Tony, is going to wrap it up for the day and talk about ethics violations and board hearings. So that is what we have on the schedule for today. And just so you know what's going on for tomorrow. Tomorrow, Karush is talking about wire fraud. We're talking about cybersecurity. We're talking about the top 5 complaints that we see in South Carolina and North Carolina at the real estate commissions with one of our E&O attorneys. We're going to talk about escrow funds and disbursement. We're going to talk about using negotiations to diffuse tense situations. And then we're going to talk about how to handle an E&O situation or a board matter if you happen to get that yellow envelope or an email or a call from someone. What do you need to do? These are things that we really should be talking about every day, but we don't. And they're things that broker in charges will probably say the same thing I do. We get these questions all the time, and we just want to make sure that you see it. So we're recording this information. We want you to attend both sessions. It's important. It's going to be required because E&O insurance and the claims and the litigious nature of what we do today, it's important for you to know what's going on. So let's get started. So first of all, Travelers Insurance had no part in preparing any verbal or written or visual materials today. That's very important. As our insurance carrier, they want you to know we put this together. They did not. They will be on the call talking with us, but they did not prepare this information. So company policy on clauses and addendums. And if anyone has any questions, put it in the chat. Haley's going to be monitoring the chat. And thank you, Haley, for putting this all together for everyone. And she's going to interrupt me and we can talk through questions. We're going to talk through, so appraisal addendums. Everybody always asks, do we have an appraisal addendum? Well, the attorneys that we are working with all have said for the liability of RE/MAX executive, for your individual agent, and for our firms, we prefer that each of your agents come to us and ask for these forms. We want to make sure that your buyers are fully educated and understand appraisal addendums. You never know how much money you're going to be putting at risk for the buyer. And it's always important that we're educating when it comes to appraisal addendums. That's why we don't have a form that goes across to all of us that can be used blanketly. But if you need a form, come to your broker in charge, come to us. It's not something that we want you to be just throwing out there without a lot of proper discussions. When you think about how prices are going or where they are today and how much we're asking buyers to pay over an appraisal, we need to make sure that we've talked to those buyers about, do you have this money in your account in addition to that down payment? You want to make sure they're going into it with their eyes wide open, because what's the worst thing that can happen is they have to pay a whole lot of money. And that is money they either don't have in their pocket, or later on they get upset and they say they didn't really understand that. So you want to make sure that you're being clear and you're communicating well to anyone that is using an appraisal addendum, whether you have one from an attorney that you're using or not. You need to be extremely careful and make sure you're clearly walking through the numbers. We've had a number of buyers come back and say, hey, I didn't really understand I was going to have to pay the difference between the appraised value and the purchase price. And in today's market, we don't need to be going to real estate jail for that.
Hey, Tiffany.
Yes.
Susan asked if we receive an appraisal addendum, should we discuss it with our BIC?
If you receive one as part of an offer, you should review it. And one of the important components that you should see is who actually drafted it. We as realtors do not draft forms. They either come to us from a forms committee in our state associations, or they come from an attorney. So we are not to be drafting anything. And on the North Carolina form, it clearly has a place that says who drafted the addendums that are attached. And if there's not an attorney's name there, you need to be going back and asking the person who's presenting it, which attorney prepared it. And most attorneys are putting their names on the bottom of those forms, so it should be easy to see. And if you don't see it, you need to ask questions, because if you're using that form, even if you didn't draft it and you're not asking questions, that could be an issue for you.
So can agents use the appraisal addendums that they got from the office last year?
We did not put out any specific forms as a firm, but if you got something from your broker in charge, or you're working with someone specifically and an attorney, and you know it came from an attorney and we have permission to use it from the attorney, you're good. But you need to, whoever gave you that form, you need to go back to them and confirm that you have permission to use it on your deals. And you need to make sure you put down who actually drafted that document, and that's an attorney. Any other questions, Haley, before I move on?
Nope, that was it.
Okay, so the next is COVID forms. A lot of people were asking questions about that. I think that is an issue that we no longer have, but there are COVID addendums that are still out there in our forms library for North Carolina and South Carolina. And so if you are wondering about those forms, talk to your broker in charge about it. I've seen a couple of them pop up here lately, but not that often. So make sure if you're concerned about it, or anyone in your party is, that you look at it. And if someone ends up having an issue with COVID while you're going through the process, stop and talk to your broker in charge to make sure that you're following the proper procedure for that. And we're notifying everyone, and we're taking the proper precautions there. Okay. Escalation clauses. A lot of us have asked, can't we have an escalation clause? Can't we say that we're going to go $1 or $100 or $1,000 over what the highest price the other buyers offered in multiple offer situation? Well, our answer to that, and the Real Estate Commission's answer to that, if you've seen any of the legal Q&As recently, is we should not be doing escalation forms. And that provides a big liability for our firm and for you individually. And why is that? It's because you're not supposed to be sharing the information of another offer without that offer giving you permission. And I don't know many buyers in today's market that are giving you permission to share their offer. And whether it be the purchase price or any other terms, it's not just the purchase price, it's everything. So escalation clauses are something that we should not be utilizing in today's market. When you look at what's happened out there and some of the issues that have happened around them, we just need to be very careful that we're not getting involved with that, and we're not accepting them as listing agents. Sometimes as listing agents, we say, you know what, I'm not the one drafting it. No big deal. Maybe I can just take it because I'm not doing this. Or even on the buyer side, you're saying, well, I'm not the one that's going to share the information, the listing agent is. So don't get yourself caught up in a situation where you're sending one to a listing agent, even if it's not you, and you're making them share information, because that ends up causing issues all the way around. South Carolina addendums. So South Carolina Form 390 addendum, it's this blanket addendum. And all of these lines, as realtors, we all want to write as much as we possibly can in all of these lines. And when we're looking at this, we're like, oh, I could write whatever I want. Well, Byron King will be on later today. He's South Carolina legal counsel. And one of the last times I talked to him, he said, Tiffany, only verbiage that you're copying over from a contract or from something else that was already written by an attorney or written by the forms committee is something that you can use here. So for example, if you're changing the purchase price, you're taking that field from the purchase price and the contract and you're putting it here. This isn't for free form, write whatever you want. And we need to be very careful with that, because that's the act of an attorney when you start drafting. So if you have questions about the South Carolina form and you're a South Carolina agent, talk to your broker in charge, contact me, contact the South Carolina hotline, but don't start writing anything and everything you want here. And I see it happen all the time. And it's a big issue in South Carolina right now. Any questions on that, Haley?
No, not on that.
Okay. Next thing is sub-agency. Oftentimes, when you're looking at sub-agency, you think, oh, I could mark sub-agency. Well, realize when you're marking sub-agency, our firm and you are both responsible for anything and everything another agent in the deal does if they don't have a buyer's agency with their client. So whether they're telling them there's no mold in the crawl space, or, oh, that roof looks great and it's not, that's on you and that's on me and that's on our firm. So be very careful. We do not accept sub-agency as a firm. So don't check that box. And on the North Carolina listing agreement, it's on page 4, item 8. You do not ever want to be checking the sub-agents mark, and our admins will not allow you to do that. But if you're new to the firm, because I know we've had a lot of growth, I want to make sure that you realize sub-agency is not something that our E&O covers, and it's not something that you're protected with. Next topic on company policies and forms. We need to make sure we're really utilizing the right forms to terminate a deal, and also be aware of a couple of forms that I'm not sure all of us are aware of. So in North Carolina, what are the best forms? You've got the termination of contract by notice to seller from buyer, which is Form 350. Then you've got the termination of contract notice to buyer from seller. Then you've got the notice to buyer to deliver cash, official bank check, wire transfer, or electronic transfer. And that and the notice to buyer are two things I really want to talk about here, as well as the termination of contract by mutual agreement with release of earnest money. In South Carolina, you've got the unilateral termination, which is Form 313, and you've got the release of agreement, Form 518. Now let's talk about Form 313. If you get a notice of termination, this is unilateral in South Carolina. It doesn't matter if the seller signs it or if the buyer signs it, it's a unilateral termination. And so it is basically saying notice is any unilateral communication from one party to the other. Notice to and from broker representing a party is deemed notice to from the party. All notice, consents, approvals, counterparts, and similar actions required under contract must be in paper or electronic writing and will be effective as of the delivery to the notice. Now, it does not matter if the other party signs this or not. It's unilateral. You can change it in MLS back to under contract if you get this from your buyer in South Carolina before a decision is made on the earnest money deposit. And as we know, in South Carolina, Form 518 is the one that is the mutual release. This is releasing you from basically the fees. And so you've got option 1, the buyer's getting money. Option 2, the seller's getting money. Option 3, we've compromised. And option 4, we're going to talk more about this tomorrow, is what happens if we have the earnest money and now we've got to go to court. When we go to court, we're actually suing our client and the other party in this process. So it's not something we want to do. So as you're thinking about termination, remember, from an emotional standpoint, you're the one to calm the situation. You're the one to diffuse it. We're going to talk more about that tomorrow. Debbie and I are going to do a little bit of Q&A. Would love to hear any questions that you guys have ahead of time if you want to shoot me a text or a message. But this document is the one that's releasing and signing off on. And this is the one that both the buyer and seller have to sign to be effective for money to change hands. If you're not using 518 now, you're not terminating correctly in South Carolina relative to where the monies go. Option 4 should be a last resort. And one of the things we'll talk about tomorrow is in the South Carolina contract, there's a section for how much money that is going to be taken out if we have to go to court. And that number is a little bit higher than I think most of us think about. So remember that when it comes to South Carolina forms. North Carolina forms. So as we're looking at this, this is North Carolina form 350T. This is a unilateral form from the buyer. And most of us are going to use this, and the number 3 here, exercised by buyer of right to terminate during due diligence. And I know everybody out in here saying, well, I know that already. I can't tell you how many times I've seen a different document come across that wasn't the actual due diligence termination. As you can see, there are a whole lot of other things that we don't use that often here. But if you have to terminate a contract, or you're trying to figure out how to terminate a contract, and you are the buyer side, come to this form, go down the list, figure out which one applies to you. This release of earnest money deposit by seller is page 2. The seller has to sign off on page 2 in order for your earnest money to come back. But you'll notice that blue box says seller's failure to sign this release does not affect the validity of buyer's unilateral termination of the contract. So if you're on the buyer side and you send this over and all of a sudden the listing agents put it back in MLS as active, that's why, because the seller doesn't have to sign it. The next form is notice to buyer to deliver cash, official bank check, wire transfer, or electronic transfer. Now, we have a lot of really high due diligence fees, a lot of really high earnest money deposits right now. Had people come to me on Friday afternoons, on Tuesdays, saying, we didn't get the money. We didn't get the due diligence, or the earnest money hasn't come yet. This is a demand notice. Not everybody realizes we have this, but the seller can send this out at any time. And what it says is basically buyer agrees to deliver to seller due diligence and earnest money based on the specified contract. And our contract in North Carolina, this is the North Carolina form, says it's effective at the signing for the due diligence fee. Earnest money depends on what's marked there. But if you didn't get that due diligence fee, or you're a little concerned about the due diligence fee, this form gives your buyer 1 banking day. And if the money doesn't come in, you can unilaterally terminate as a seller. So if you're concerned about getting due diligence money, maybe you send this out when you return the offer to purchase. Has anyone had this happen or used this form recently?
Tiffany, would you advise using the form 355 when we accept a contract?
If you're concerned about due diligence, or if you want to make it just your regular practice, this is a notice that's saying we want this within 1 banking day. What typically happens is it's Friday at 4:55 or 5 o'clock, and someone's freaking out because they didn't get their $50,000 due diligence money. And they come and say, Tiffany, what can we do? How can we get this? Can we terminate it right now? Because we want the weekend. We want to market all weekend. Well, you can't market all weekend if you didn't send this form out one banking day prior. And banking day, it depends on the bank. And most of the time, that Saturday and Sunday is what is not counted. So you would have to wait until Monday to know that you could actually terminate the deal. So you've got to be careful, but best practice could be utilizing this form with every transaction. And at least you know the money's coming back, or if there's any hiccup, or if someone says it's in the mail, this is another way to handle that. And when we're talking about due diligence, we're often talking about a lot of money these days, not $100 or $500, but thousands of dollars. So the US Postal Service is probably not the best way to send that. And certified mail or some type of overnight is probably the best route if the money's not there for you. Termination of contract by notice to buyer from seller. This is what you send if after one banking day, you don't have the money as a seller, and you have every right to do so. And the number one says buyer's failure to timely deliver the due diligence fee or initial earnest money by cash and with the written notice. So you've given the written notice and then you're doing the termination. So this is a form we don't see all that often because we do not have to utilize it, but it's something that you need to realize is out there when your seller needs it. And this is how you protect your seller.
Can you elaborate on what timely means?
Well, timely means that you've had to have delivered this form, and timely is the effective date of the contract for due diligence money. Earnest money, it depends on whether they put 5 days in or with this offer. And so this says that you're giving them one banking day after written notice to deliver it on 355T. And then on 352T, it says, yes, I've given you written notice and now I'm terminating.
Tiffany, Karen asked, so she's seen people or agents on Facebook saying that they wait to change the status in MLS to under contract. They wait until they've received the due diligence. Is that correct? What's your opinion?
That is not the proper way to do it. You're supposed to change it within 1 day. And so not changing it within 1 business day is a problem. And when you see that out there, you could technically report it because it's not proper. And I'll tell you that personally, years ago, when we started getting due diligence and I had a couple of issues, I did that. And then one of the reasons I was on the rules committee and was so I could ask questions. And I realized that I was doing it incorrectly at the time. That's been year upon year ago when due diligence first started. But it is not proper to not change the status in MLS until you get the due diligence money. You need to be handling it through the forms and through the written notices.
Got it.
So Form 390T. I'm sorry, was there another question?
Nope. Mm-mm.
Okay. So oftentimes I'll see this form, and this is not the correct form. If your client is terminating the deal during due diligence period, you're sending the unilateral notice. The seller didn't say, okay, I'm good with that, we'll mutually terminate. But if you have a mutual termination, this says termination of contract by mutual agreement with release of earnest money. This is saying how and where the earnest money is going and being signed off. It's signed by the buyer and the seller, and it's not unilateral. So this form doesn't happen all the time because we all know most of the time the party that's not terminating definitely doesn't want to see the termination. So be careful when you use this form. It is not the proper form if you're terminating during the due diligence period. Personal deals. This is one thing as a company policy and our policy and procedures manual that we all signed when we signed our independent contractor agreement in joining RE/MAX Executive. It specifically outlines in there that the seller and buyer acknowledges that he has been advised that the purchaser seller is a licensed real estate salesperson or broker and is purchasing for his own account or for the account of his immediate family member. If you're doing a personal deal, this must be in the documents in order to do it. And before purchasing or selling any property where you have an ownership interest, you should speak to your broker in charge and make them aware that you're doing a personal deal. The other component is property disclosures and making sure that all parties sign your property disclosure and that there's a written home inspection report issued or waived by the buyer in writing. And then we need to make sure you're utilizing all state and local board approved sales contracts. If you're starting to use documents that are not board approved, then there are going to be some issues with personal deals. And we're not going to get into the fees and all of that today as to how personal deals are handled. But this is something from an E&O standpoint that you need to be aware of, because you don't want to be in a situation where our E&O will not cover you at all. So make sure you're using the local forms, that you're getting a home inspection or the buyer's waiving in writing that you've got the property disclosure signed. And let's say that it's an estate sale, or let's say that it's one of the exemptions to where you don't have to use a property disclosure. Get them to do no representation or do something so that you got the document there. And as an owner, you can't do no representation, but from an estate side, you need to have something in writing regarding the disclosures if you own the property or if you're selling it as an estate. And then you need to have, again, in writing the information here about everyone acknowledges that there's a broker involved in the transaction. Haley, were there other questions?
Well, I think that you kind of just touched on this, but Virginia just asked, what's the best way to acknowledge the disclosure of family deals?
When you say acknowledge, I would share it in the listing agreement. I would share it in the offer to purchase and make sure that all parties are aware of it. I even, when I'm doing a personal deal or have interest in it, I've always gone down to where it has the listing agent or the buyer's agent information at the bottom of the contract. And I've had everyone initial and date around that, seeing that it's my name down there as well. So the more things you can do to make sure you've got that in writing, the better. But having this acknowledgement listed in the paperwork is important to make sure E&O would cover you. And we're getting close to Katie and Annie's time. Kaylee, can you tell if they're on yet or not?
I saw Annie here, Annie's here, and Katie's here.
Okay, well, the next portion, if no one has any other questions, Haley?
Yep, that's it for questions.
Okay, so Katie Marsh is with Travelers Insurance, and she is claim counsel. She's typically the first person that we speak to when we have an issue after we've reported it as a claim. And we'll talk tomorrow more about how you report a claim. But she's here to talk to you today a little bit about your personal property disclosures, what we just talked about, and also about E&O deductibles. And our deductibles are $5,000 if we have a claim. And there's some certain ways that you can get that excused. And she's going to talk a little bit about that. Annie Neal is also here. She's our account executive with Real Estate Insurance Solutions. And they both have a ton of knowledge and a ton of experience in the workforce of what we do and how we do day in and day out with E&O. And so we wanted them to share a little bit about E&O. Welcome, Katie. Welcome, Annie.
Thank you. Thank you for having us.
And again, I just want to remind everyone that second slide that we shared, Katie did not have any part in putting together this information. She's coming to speak as a Travelers representative, but the documentation and what we put together here is that the content of RE/MAX Executive. Okay.
Hi. So I will probably let Katie speak first because she's the claims person, and she's the one that's going to determine claims based on how the claim is presented. But Katie, I'm assuming that you will touch on some of the things that Tiffany said. There were just some discrepancies actually on what your E&O would require for personal transactions. So I want to make sure we're really clear on that.
Yeah.
You want to address that, Katie?
Yeah, I did have some notes on that. I understand that Haley, you wanted me to touch on the owned property exclusion in the policy, and how a transaction that you are acting as the listing or or purchasing agent for a property that you or any related person or entity have a financial interest in, how that would fall within the policy. And I can't say whether or not, a specific a specific scenario would be covered as a claim under the policy or wouldn't be. It would depend completely on the facts and circumstances presented for each individual claim. But in general, I can tell you there is an exclusion under the policy for coverage for transactions where you are essentially representing yourself or a related person or entity, which under the policy is a related person is a spouse, an insured person's spouse, so an agent or broker spouse, or an entity that you or any insured person spouse individually or collectively holds a majority financial interest. It could also be any entity that has a financial interest in your company. Those would be considered related persons. And if you act as the listing agent for a property that is owned more than 25% by you or a related entity, generally there's not going to be coverage for it under the policy. There are some carve-outs for that exception to say that maybe if certain requirements are met, there may be coverage under the policy. Of course, there may be other exclusions that kick it back out from not being covered or kick it back out from being covered. But typically, if like I said, 25% interest, if the insured or any related entity doesn't own more than 25% of it, that exclusion may not apply to preclude coverage. Or if say you are selling your property, but you hire another agent within your company to be the listing agent, that would not cause essentially the conflict of interest that this whole exclusion is designed to prevent. So you could hire one of your coworkers to list your house, and that would exempt this exclusion from applying to preclude coverage. Again, there could be other exclusions that would preclude coverage, but in general, that would take it out of this exclusion's prevention of coverage. And then kind of the biggest carve out would be where you're selling a property that you or a related person, say your spouse has a company and flips houses and you are going to act as the listing agent. And your spouse owns, or her company owns, or his company owns more than 25% of this property, and you are going to act as the listing agent or broker for it. If you have the following 5 things, then this carve out would apply to preclude this exclusion from applying to exclude coverage. So the five different elements are, as Tiffany mentioned, a written property inspection report. It has to be issued by a licensed or accredited home inspector. A home warranty policy must be purchased or provided by the builder if it's a new construction. And then a property disclosure, which, as I'm sure you all know, is a document that it's a disclosure in writing of the known conditions of the property, including the structures, the appliances, mechanical, environmental hazards, any past flooding, deed restrictions, zoning ordinances, things of that nature. So that has to be provided and accepted in writing by the buyer. So you need to have the buyer sign off on those property disclosures. You also need to have the buyer sign off on an ownership interest disclosure. And that's a disclosure in writing of the ownership interest held in the property by the insured, which would be you essentially, or a related person or entity. So a document saying, this property is owned by the listing agent's spouse, or this property is owned by the listing agent, and have that signed by the purchaser prior to the closing. And the last of the 5 requirements is an agency representation disclosure. And that's each agent or broker's written disclosure explaining who they represent, essentially. And that also needs to be accepted in writing prior to the closing date. So this is not come to the closing table and sign off on something. This has to be signed, acknowledged, and understood by the purchaser before you even get to the closing table. So, you know, if the carve out applies to take the exclusion off the table, it could be possible to find coverage under the policy for an owned property transaction. But again, it all depends on the facts and circumstances. So it's important to document as much as you can and, you know, make sure you're being as diligent as possible in that regard.
Katie, what if you are the executor of an estate?
I would defer to legal counsel on that. Your North Carolina legal counsel under the policy that's not specifically provided for. But if you are the sole beneficiary of the estate or, you know, a trustee of some sort, that brings in all sorts of legal issues. So we would definitely want you to consult with an attorney on that one. But in terms of coverage, I can't speak to that.
And is there a written list of these 5 requirements anywhere?
It's in the policy. It's a written
Okay.
portion of the exclusion. Yes.
Cool.
I'm sure you guys can probably all get copies of that out to your agents.
On tomorrow's session, we will have them all listed out so that you'll have a copy of it as well if you go out.
Okay.
Annie, did you have anything to add to that?
You know, I don't. I just wanted to, well, I guess I kind of do. I wanted to also touch on the fact that there is something that was kind of brought up a little bit, but wasn't really addressed, and that's like construction development. I know Katie mentioned like flipping. So I just want to make sure that your agents are all aware that the same rule applies with construction development. If you have a spouse that's building, you know, spec homes, and then the agent is selling them through the firm or a related entity, those are actually a completely separate endorsement to the policy. That's not just covered like an agent-owned transaction. So if someone in the firm is doing something like that, they really need to make sure that they're reaching out to the broker in charge, or talking to Karush or whoever it is that you guys want them to do, just to really make sure that we get that put onto the policy. If it's not already on there, you've got to have separate coverage for that because it's not a regular transaction.
That is great
And then-
information.
Yeah, and Haley, I'm going to email you that list real quick, just so you have it in front of you for your people.
Wonderful.
You're
Thank
welcome. So, did you want to go ahead, Katie, then and go through the reduced deductible requirements?
Sure. Let me see. Yeah. So, under your policy with Travelers, there's a $5,000 deductible per claim. That means as soon as a claim is filed, the first $5,000 expended, whether that be on defense counsel's fees or paying off a settlement or damages or whatever's awarded against you in a lawsuit, the first $5,000 is going to be coming out of the insured's pocket. And I'm not sure how y'all handle that internally, but the first 5,000 would have to come from your end before Travelers coverage limits kick in to cover any amounts in excess of 5,000. There is a reduced deductible for residential property endorsement on the policy, which allows the Travelers to waive up to $5,000, which is your deductible for each claim. If it's if it's resulting from the sale of a residential property, and when a property disclosure is completed by the seller and provided to the buyer, again, prior to closing. So we may waive the deductible obligation if we get that property disclosure acknowledged by the buyer prior to closing, if either the claim is based out of or arises out of undisclosed defects, provided that the seller's protection plan or that a seller's protection plan or policy was purchased for the residential property. Those are, we don't see the seller's protection plan or policy purchased often. That is not something that we see as much as the second portion of this endorsement, which says that we'll waive that $5,000 deductible if we get a property disclosure completed and a state or a local board approved sales contract was used by the seller and the buyer for the sale of the property, provided that a property inspection by a licensed or accredited home inspector was completed prior to the closing or waived in writing by the buyer prior to the closing. This, just like with the owned property exclusion, inspection is going to be very important by a licensed or accredited home inspector. If it needs to be completed, well, for the owned property exclusion, it has to be completed. But for the reduced deductible, it has to be either completed prior to the closing or waived in writing by the buyer prior to the closing. But then the whole waiver of the deductible is not even an option if you're acting as a dual agent. So that's just kind of a caveat in there. If you're acting as a dual agent, you're not going to be able to waive the deductible because it's just, it's a higher risk transaction in terms of liability. So that's what the policy provides in terms of the waiver of that $5,000 deductible.
Katie, what if a home warranty is offered in writing, but the buyer doesn't want to purchase it?
So a home warranty used to be a requirement for the reduced deductible obligation. Are you asking in terms of the owned property or this reduced deductible one?
I believe she means reduced deductible.
Oh, if a home warranty is no longer one of the requirements for this deductible, but the property inspection is and the property disclosures are what are required.
But the home warranty does have to be waived in writing still by the buyer.
Got it.
Okay. And then I would also step in and just encourage, because while we love travelers and you have been with travelers for a long time, I'd kind of use a rule of thumb that every carrier has different requirements. So in my world, I say you always want to have the standard board forms, the seller's disclosures, a home inspection and or waived in writing by the buyer. And then, I just forgot my fourth one. Home inspection, seller's disclosures, home warranty. What did I miss?
Standard forms. You said it.
Okay. So yeah, you always want to have all four of those on there. If you have a buyer that doesn't want to have a home inspection, get it waived in writing. If you have a buyer that doesn't want the home warranty, get it waived in writing. Not every carrier has the same requirements. So it's really important to always try to have those four things if you want to reduce deductible. But every carrier will not allow the reduced deductible if the firm or agent acted as the agent for both buyer and seller.
Hey,
Does an email
this is
work?
Sandy. This is Sandy. Can I chime in here real quick for the North Carolina people? In ZIP forms, we have a form called the Professional Services Disclosure, and that form is a standard form from the Association of Realtors that has the ability to waive any of those inspections or home warranty.
Great point, Sandy. That is definitely a form, the professional services disclosure, that if you're not using it today is a form that can have people waive in and waive out of items, even if you're recommending different groups, there's a whole list there.
Yeah, that's actually a really good point as well, Tiffany. And I was going to kind of bring that up tomorrow a little bit in the cyber issue, but I know that you guys probably were all told this in real estate school, because I know I was many years ago. Always offer at least 3 home inspectors, 3 different whatever it is that you're doing. Always make sure, because that seems to be something that we're seeing claims in lately is, well, they referred this person. And I always used to tell my people, call them, talk to this mortgage broker, see if you like them. Here's 3 different ones that we've worked with in the past. Work with the one you like. And that's good to do as well, just in the, even with these disclosures and trying to get reduced deductibles, regardless, is just making sure that you're offering more than one.
That is a great point, Annie. And Annie and Katie, we really appreciate you joining us today, and we look forward to talking to you more tomorrow. And again, thank you for your time.
Thanks for
Thank
having
you.
us.
Thank you.
So now Karush is on to talk about property management and commercial departments, and then we'll roll into real estate forms. But just popped his slide up, and Karush, just prompt me when you're ready to keep moving.
Thanks, Tiffany. Good afternoon, everyone. I'm sure you're all excited to spend the rest of the afternoon talking about all this legal stuff, right? There's no better way to start a Monday. Thank you for your patience. I know E&O and legal conversations are not the most fun topics, but it's very important for us to spend this time. It's necessary for us to review what's important, how to stay out of trouble. I actually found a slideshow, sent some slides to Tiffany. I thought after 30 minutes of legal talk, we probably want to bring some humor into it. So again, thanks for everybody for being here today. I'm going to talk a little bit about property management and commercial real estate, because there has been some questions around that. So try to cover that and tell you what are the do's and don'ts, what we can see, from 30,000 feet view. We're not going to get into details, but just give you some ideas. Okay, Tiffany, we can go to the next slide. So starting with the property management, I know most of you, the first place you look at the bulletin, when you get that bulletin on your email, the first place you're going to check is always the disciplinary actions. Raise your hand if you're not one of those people, okay? Okay, just one. Okay, interesting. At least we have a lot of honest people on the call. I'm the same way. We're all curious to find out what is happening and who got into trouble. And I think you would agree with me that most of the cases are property management related. At least 60% of disciplinary actions are related to property management activities. And so I have to say, full disclosure, it is not my favorite topic, but it's important to talk about. It's a sticky business, especially residential property management. The first question we get a lot, agents ask us, can I sign a property management agreement on behalf of RE/MAX Executive? So let's just talk about that. As a company, our policy, we do not allow our RE/MAX brokers to engage in property management activities. So there are forms on the commission website. There are forms available through Zip Form for you. Those forms are available. That doesn't mean that you can write a management agreement, start managing properties on behalf of RE/MAX and sign those agreements. And I want to explain that because some of the brokers within RE/MAX Executive Network, they do this property management business on the side. That means that they have a corporation, they have their own S corp, and as a licensed agent, you can manage property for others. That's fine. As long as you understand that when you sign a property management agreement with your own firm, you are responsible for all the liabilities and anything that goes wrong with that management agreement. This is not a RE/MAX contract. It's not an agreement that we get involved. So put the slide, again, I'm talking on behalf of all your broker in charges. They cannot answer your property management questions, and they certainly don't want to get calls. Sometimes we get phone calls from tenants, from clients that they're basically working with our agents as property managers, and really it puts us in a really bad position because we have no knowledge of those agreements in place. It really can't help the consumer or your client. So make sure you use your contact information. Do not share the office main line with them if you're managing property on the side, and make sure you have E&O, because our E&O coverage for RE/MAX Executive does not cover the property management activities of RE/MAX agents. And there are ways to do it, but we don't do it on the RE/MAX. So I've got Mill Elliott's information on the screen for you. We have a property management division. The name of that entity, this is not a franchise entity. This entity is called Select Real Estate Group. It's one of our companies that we have formed for property management purposes only. And we have about a dozen property managers. That's what they do full time. They're educated, they have the certifications. They don't sell real estate. What if they do, they have additional affiliations. So Mill Elliott is the broker in charge of that division. If you have clients that they have rental units and they're looking for a property manager, or if you have agents in your office, or any of you are interested to become a property manager, if you can go back to the slide, I want to make sure that everybody has that information. Write down Mill Elliott's information, phone number, email address. You can get in touch with Mill. She can explain the requirements of you if you're interested to be part of that property management division. Once you join that department, that office, there will be coverage through this entity for property management activities, and Mill can talk to you about the education requirement to be part of that. But if you're doing it outside of RE/MAX and you're not doing it under Select Real Estate Group, make sure you talk to a broker like Annie. Make sure that you have the coverage needed if a claim arises. Okay, go to the next slide. I just have information of some of your brokers, your fellow brokers, that they are part of this property management division with RE/MAX Executive. They have dual affiliation with Select Real Estate, so they do manage property for others. So I have the names of the few on the screen. We have, like I said, we have about a dozen property managers. I just picked the RE/MAX brokers that they have dual affiliation to share that with you. Next slide. Okay, so the keyword is inclusive education. If you want to get involved in property management, the first thing I say is to try to find the education necessary. There's a lot of brokers out there that they're doing property management, and it's lucrative. You know, people think about mailbox money, but it's not that easy. I would say make a phone call, talk to Mill, talk to some of our brokers, the slide that I had, get in touch with them. Property management it can be a very profitable venture, but at the same time, very, very difficult because you're constantly dealing with tenants. And the biggest challenge here that you guys have as licensed agents, you don't represent the tenants. So your fiduciary is to the homeowner. You need to make sure that you protect the landlord and the homeowner. At the same time, you've got the consumer in the property, and you got to make sure you follow the rules. And you can't just say, well, I don't talk to you because you're not my client. So it's always, you know, I can talk about property management. I've been involved with the property management division for about 12 years now. And I can share with you stories to make you think twice before you get involved in property management. So if you're just thinking about it, make sure you give me a call. Again, I promise not to discourage you to get out of it, but I'll give you the information you need to stay out of trouble. So key points. Only licensed brokers can manage property for others. So if you don't have a real estate license, you cannot manage property for other people. However, unlicensed staff members of a licensed firm can perform management duties. For example, if we have a property management department, Haley is not licensed. As long as Haley works for this company under my supervision, she can perform property management activities. I'm listing a few organizations here for everyone to show you where you can get additional information for property management if you're interested. The Institute of Real Estate Management, National Association of Residential Property Managers. We've got a separate organization that is dealing more with apartment rentals. Now that we have a lot of vacation rentals, we have VRMA, that's another organization. They have their own course on training education. Very, very important. Vacation rentals are handled totally different. And then we have Building Owners and Managers Association International, which is a global network. So any of these entities, if you go to their website, you're going to find additional information. There are courses that they're offering. Before you get involved in property management, I highly recommend you take a course, get yourself familiar with the rules and regulations around that. Next. Now let's talk about commercial transactions. They are covered by our E&O. So we do not have a separate policy for commercial activities, commercial transactions. However, you have to have, just like property management, you have to have the experience and the knowledge. A lot of us, we get tempted when we have residential clients and they want to sell a business, they got a commercial building, and we're thinking, okay, well, this is a good sized transaction. How can I keep the commission here? I get a lot of calls from agents, and it usually starts this way. I know this family. I want to be involved in this transaction. I'm trying to figure out if there's somebody in the office helping me. Well, you have to think twice. You do not want to be the agent on the forefront of this transaction if you've never done commercial transaction, because that one transaction can cost you your license. I get this conversation, I get this phone call a lot. People ask me, how do I get involved? Well, if you've never done this, you do not want to be the main agent on this transaction. You can be involved and receive a referral fee, but you do not want to handle commercial transactions if you've never done them before. You want to work with an experienced broker. There's so many institutions to get information and education, but I just named two of the most known and popular organizations in the commercial world. You probably heard about the CCIM, Certified Commercial Investment Member. This is the most known and I would say respected name in the commercial business. It's a global organization. They have about 10,000 members in the United States. It's very intensive. You probably, the fastest way that you can acquire your CCIM will be about 24 months. So there's a testing process, about 6 hours of test. So it's not for everyone, but it opens a lot of opportunities because CCIM members, they refer to each other. So it's a great tight network, a lot of opportunities as far as referrals, but there's an entry barrier. And then we have the other group, Society of Industrial and Office Realtors. They're more focused on office buildings and industrial office space. It's a smaller group, doesn't have the same barrier. We still have to take some courses, but it's not 2 years. They have about 4,000 members in the United States. Next. Okay, so we want to talk a little bit about the Real Estate Commission, North Carolina Real Estate Commission and South Carolina Real Estate Commission. But before I talk about that, I want to just pause, just say one more thing about the commercial transactions, and I want to pause and see if any questions about property management and commercial. The key point here is competency. So the commissions in North Carolina or South Carolina, they don't issue a separate license for the brokers to be engaged in these activities. So if you're a South Carolina broker or a North Carolina broker, you can sell commercial real estate, you can manage properties. However, you got to understand that if you are in trouble and you have a case and somebody files a complaint or you got a civil case, as a licensee, if you fail to prove that you've got competency, experience in those fields, that will cost you. And so that they always look at it, you help this client to buy a business place, an industrial space. Was this your first transaction? What did you do? Who helped you? Did you have somebody oversee this transaction with you? How many years of experience you have? This is a very specialized business. When you get into commercial, the commercial properties are income generated properties. You need to know about a lot about the finances, about the zoning, about the restrictions. And so very easily brokers get into trouble. And just like as you see that property managers, they usually end up on the back of the bulletin in North Carolina. We don't have a lot of residential brokers trying to sell commercial properties, but if they do, the outcome is going to be the same. So again, go back to competency. If you keep that in mind, that without the experience, you're going to lose a case with the commission or in court. So with that, I just want to pause here and see if there's any questions around property management or commercial transactions before we move on.
So Karush, I didn't see any questions about commercial, but Nicole mentioned, are the requirements for property management different in South Carolina in regards to licensing?
They are. I don't have a slide for that, but I will share that information with you so you can share with everyone after the meeting. Correct.
Okay.
Any other questions?
Nope, that is it.
Good. Okay. So we want to talk quickly about North Carolina Real Estate Commission and South Carolina Real Estate Commission. We hear a lot of times brokers, not RE/MAX agents, but other brokers, they call the Real Estate Commission about commission disputes. They call them about contracts. And I thought it's important for us to make this clear distinction that the commission is actually a government agency. They're a licensing body. Before I share any more, I want to make sure that, Haley, we don't have any outsiders on this call, right? All real estate agents, all RE/MAX agents, correct?
And Byron King is on the call, Karush.
Okay, Byron is
Yep.
with our Realtor Association, so
Okay.
I feel comfortable to continue this conversation. When you call the Real Estate Commission, they are not going to comment anything about your contracts. They don't care about the commission disputes. Again, think of them as a licensing body. They're part of the government. They're an independent government agency. All they do is they issue your license. They tell you how you're supposed to conduct your business. The Real Estate Commission regulates real estate brokers. They don't help you guys. And in a nutshell, they are not your friend. They act like consumer agencies. When you call the Real Estate Commission, the first thing they do is ask you to give them your license number. Everything you say is going to be recorded. And if they need to go back and say, okay, we've got this agent calling 50 times, it looks like they're not really going through the updates. They're not really taking taking the information through the CE class, the education that is required. So I thought it was important to share this with you because I had a conversation with someone on the commission, and they shared the number of these phone calls that they're receiving from agents about non-related matters. So I wanted to make a clear distinction. We do not call South Carolina LLR about commission disputes. We do not call them about agency problems. We're not calling the Real Estate Commission in North Carolina about any of those issues. They're a licensing body, and there are very few forms that are drafted by these entities. We can go to the next slide. Okay, so I've got the list of the forms. The screen is a little unclear. I don't know what's going on with the screen. Can you read it? Because on my end, they're all like the words are going together, but I can go over it. In North Carolina, we only have 3 forms drafted by the Real Estate Commission. It's the Residential Property Owner Association Disclosure Statement, the Mineral and Oil and Gas and Right Disclosure Statement, and Working with Real Estate Agent. So for North Carolina brokers, your commission only has 3 forms. All the other forms out there, they're provided by your state association and bar association. Those forms are not North Carolina Commission forms. So if you call them and start asking questions about one of those forms, first of all, they don't comment on it, but they can't. This is not their legal form. They don't want to talk about any of those contracts. And really, at the end of the day, South Carolina Real Estate Commission, North Carolina Real Estate Commission, they don't dictate what forms we need to use. As long as everything that we put on a contract in a piece of paper is legal, and we follow the guidelines set by the commission, they're good. They're not telling us which forms to use. They're not really supervising the state board forms. They're not going to supervise your company forms. In South Carolina, we got a couple more forms that are actually drafted by the commission. So same thing like in North Carolina. We got the property disclosure, but we also have the South Carolina disclosure of a relationship, brokerage relationship, offer rejection form, designated agency agreement, and dual agency agreement. Those forms are drafted by South Carolina Real Estate Commission. All of the forms are drafted by your state association. Let's go to the next slide. Talking about the Residential Property and Owners Association disclosure. So I wanted to share this again, based on the questions that I get. This form is required for every property owner. So general statutes, I'll put the number in there, 47E, Disclosure Act, requires owners of certain residential real estate, such as single family homes, individual condominiums, townhouses and buildings up to 4 units. They have to furnish purchaser a property disclosure. So whether you're selling your own property, you're not using an agent or a real estate agent, you have to have this disclosure part of your transaction for selling residential real estate in North Carolina, and that's part of the Disclosure Act. And they added the second piece of it, which is the mineral and oil and gas rights. Let's go to the next page. We have similar law in South Carolina. South Carolina Code of Law, Title 27, Chapter 50 talks about requirements of owners of real property, single family dwelling or single transaction involving transfer of 4 dwelling units or less, shall provide to a purchaser this complete and signed disclosure statement. So we got the very similar requirement in South Carolina. One thing that I highlighted here for you, for any sale, exchange, and installment land sale and lease with option to purchase. So if you have a lease with option to purchase, you still have to use this property disclosure. So which body is actually drafting the forms that we're dealing with every day? And at the beginning of this conversation, someone asked about, I think it was Linda, she asked about the forms and how do we make these forms easily available to our brokers. So I want to share with you some good news. We have been working with SkySlope, our transaction system, to get licensing for the South Carolina and North Carolina forms to make them available through our transaction platform. So you don't have to access Zip Form and bring the forms into the SkySlope. So the forms will be available in the next 30 days in the forms library of SkySlope. It will be a lot easier and seamless for you to access the North Carolina forms. We already got approval on that for North Carolina. It's going to go live in December. South Carolina forms will be available before the end of the year. So that's good news. You no longer need to go to Zip Form to access those forms. We're getting licensing for both states. So the forms in North Carolina are drafted by the Forms Committee and the Bar Association. And sorry, can we go back?
I was going to go to this. Is that where you want it to be?
No, I wanted to show that. Well, yes. So in North Carolina, Tiffany, I put a list of brokers that are on that Forms Committee. As you can see, it's a really large body. It's got a lot of members. You and I both get calls from brokers that they're asking about, hey, why don't we have this form? Why don't we have the appraisal addendum? We should ask the board to draft this form. Well, I wanted to share this with everyone. You guys can get in touch with these board members directly, and I highlighted the ones in our region. So as you can see, we got several board members of Canopy, Union County Association. We got one from Cape Fear, from Wilmington Market, and we also have a member from Land of the Sky, Asheville Market. So Haley will share this screen with everyone, so you guys know the people on the Forms Committee. If you want to share your voice, feel free to contact them directly, as we are doing as a company.
And Melanie Coyne is this incoming chair, and she is with Canopy. So she is the chair of the committee. So if there's anything that you want to share, talk with her or anyone on here, or if you have ideas that you want us to present, please don't hesitate to share with them, because Lee Allen and myself and Scott and others are all associated and actively engaged in sharing information with the association.
Okay, now I think I got a couple of slides. Can we go back? Okay, so let's see.
So you were here, and
Yes.
then we're going to introduce Legal Hotline.
Okay, so now since we have, so I don't think we have, do we have Will on the call? No, we
Will
don't.
is not on the call, but we wanted everyone to realize that there is a legal hotline in North Carolina for the Realtor Association. So the association is the group that represents you and us as realtors. So Will Martin is Byron King's counterpart in North Carolina. Byron King's on the call today from South Carolina.
Great. So Tiffany, I think that's it for me for this portion of the presentation. Just to wrap it up, again, I want to appreciate everybody to be on this call. As you mentioned, we live in a very litigious world, and things are getting tougher and tougher for especially us in the real estate business, where we're dealing with contracts and negotiations all day. We ask everyone to attend this E&O training, because it's important to keep track and log of you guys taking your part. I wanted to share this with you and just in my presentation for today. It is important to have you guys involved in these trainings in case we are involved in a lawsuit in a case. And I want to, without sharing a lot of detailed information, we had a situation about a year ago that basically it was a litigation process for an agent that was also being investigated at the same time by the Real Estate Commission. And what actually helped us was all the records and showing that this agent, they did their part and they participated in all the educations and the trainings. They had the disclosure, they attended E&O sessions. So that was really useful. So for that reason, we asked Haley and Tiffany to help us to present this training in a way that we can keep track of it. We make sure that if needed, we can provide information who attended this course. So with that, I'll let you introduce our next guest speaker, Byron King.
Great. Thank you so much, Karush. That information was incredible and very useful for us all. Byron King is joining us today. Thank you for coming on, Byron. He is the Senior VP and General Counsel of the South Carolina Association of Realtors. He has a hand in preparing the forms that we utilize in South Carolina and is very knowledgeable. He and Austin Smallwood and Tiara are all three on the South Carolina Legal Hotline. Byron answers questions all the time, as well as his colleagues, relative to how do I handle certain situations. And Byron, just want to thank you and welcome you to the call today, and wanted just to hear your insight on what you're finding are the biggest issues today, whether it be with contracts or terminations in South Carolina, what you're seeing out there that realtors really need to be aware of as we do our day-to-day business and protecting our clients and working in the best interest of everyone involved.
Yeah, thanks, Tiffany. Byron King, South Carolina Association of Realtors. So, I'm a lawyer. I've got my cat filter on. So if you can see, I don't know if I can see that or not.
We can see your cat filter. Yes.
All right, so we got that out of the way. Let me turn that off. All right, so thanks for the invite, Remax and Tiffany and Karush. Good information. Today's November 15th. I know this is being recorded, so if you're watching after the 15th, some of this information may not be valid anymore, but it's valid as of today. So kind of what we do at the association, and you can see my contact information there, the phone number and the email, is for risk management, we help your bottom line. So your gross minus your cost and losses is your profit, right? So if we can help with the minimizing your cost and minimizing your losses, we can help increase your profits. So risk management puts money in your pockets. It's a dry subject, but at the end of the day, it's one of the more important subjects for your profitability. So we can help you. Some things realtors, we see realtors having to buy a refrigerator for various reasons at the closing, or pay for some repair because they didn't follow all the risk management strategies that we've outlined, or even getting sued or facing ethics complaints and having to pay an ethics fine, or like Karush was saying, if you deal with the government, with the kind of the police force of the South Carolina Real Estate Commission, paying fines. And if you're found in violation of the Real Estate Commission, they publish your name on the internet, so that could hurt your future business. And if people are upset with your services, they may not refer you, so it could hurt you in future business. So a lot of good reasons to try to use risk management. So I know you guys have been sitting here for a while, so I was trying to think of ways to spruce up on that funny cat filter. And so I was going to do kind of a top 10, because I think that's about all the kind of your brain can hold probably at this point. So we'll do the top 10 kind of risk management issues that we see. And if you want to write in the chat some things you think might pop up, I know realtors are competitive, and I can see issues that maybe we need to investigate as you put stuff into the chat. So if you type into the chat what you think some of the top 10 issues are, and I'll go with number 10. So number 10 on the top 10 legal issues. People don't understand what the legal hotline is. So a lot of times they get realtors call and they get upset with me because they're in a lawsuit and they want me to basically fix it. So we're good. The legal hotline is good before the lawsuit becomes a thing. So we give you, if you call us on the front end, we can tell you which forms to use. We can tell you how to fill out the forms. We can give you some strategies with your advertising. based on license law and the code, Realtor Code of Ethics, to try to help you prevent you from being faced with a complaint, an ethics complaint, a license law complaint, or a lawsuit, or upset consumers. So hotline's good on the front end. We can give you these strategies, but once it becomes a dispute where you've got a buyer and seller that want to sue each other about earnest money or condition of the property, or feel you were acting unethically, or you violated license law, it's too late for the hotline. So a lot of times realtors won't need to basically say they're right and the other realtor is wrong. So once it's gotten to that dispute level, the hotline's not good at fixing that, because it'd be a rush to judgment. I only have one side of the information. And in a hearing, there's always another side to the story. There's more information. A full hearing would have documents, lawyers making presentations. So it's impossible for the legal hotline to say, you're right, the other side is wrong. So a lot of people get upset when we say, you know, you have to talk to the lawyer because you may be going to court. And that includes your buyers and sellers. A lot of times the calls are about earnest money and they get upset. They want me to say their client gets the earnest money and the other side doesn't get the earnest money, or their client is not in breach and the other side is in breach. And that takes full hearings. The hotline's not good at solving disputes like that. The hotline is good at trying to help prepare you on the front end of a transaction. So I'll look at the chat here. It says due diligence versus repair options. So so we're playing like Family Feud. That would turn over probably number 7 out of 10. So that was a good guess for Pam Wigington. She got one right. So going into number 9, so we talked about number 10. Realtors misunderstand what the hotline can do. They think the hotline can solve legal disputes, and we can't do that. You have to go to court for that a lot of times. Oh, we do offer mediation to help you settle disputes. We have free Zoom mediation, or the parties can hire mediators to meet in person and try to settle. So number 10 kind of meshes well with what Karush was talking about with renters. So red flags where you need to get an attorney involved in the transaction. So some red flags. You walk up on a showing appointment, you see solar panels on the roof, or you're doing a showing with your buyer clients and you see solar panels on the roof. So that should be a red flag to you need to get an attorney involved. Parties are going to need closing attorneys anyway. Go ahead and get them involved at the front end of the transaction, because solar panels can be owned by the seller, which that's the most simple one. They could be leased by the seller. Then you got to get involved with assuming the lease, getting the deposits shifted back and forth. Or they could be financed. And the financing may be the most problematic one, because that could become a lien, right? And the South Carolina contract requires the seller to transfer a property without any liens on the property. And so a lot of times, just like mortgages, these solar panel loans get sold on the secondary market, and it's tough to find out who actually owns that loan that's paying off the solar panel, and then being able to get a payoff from that person, the closing attorney, to get a payoff, and even to get it satisfied. So if you see solar panels, that's kind of a red flag to any realtors.
Hello. Hey, sorry about that.
And so we talked about solar panels. Another thing would be kind of dovetailing with Karush's presentation. If you're listing and you see that there's residents and there's tenants in there, or you're listing it, you know it's an Airbnb or VRBO in your market, or you're doing a listing presentation and you find out there's vacation rental, say in your area, I guess maybe the lakes would be a popular vacation rental, or say for the bowl game or some of the NFL games, there are vacation rentals in the downtown Charlotte area, or Fort Mill, Lake Wiley, that sort of thing. So if there's tenants involved or vacation rentals involved, again, get the closing attorneys involved up front, because the SCR contract requires the seller to deliver a vacant property free of any encumbrances, so future rental, a lease, and all these can be handled by the attorneys. They can easily be handled, but our standard cookie cutter residential real sale contract is for your standard: the sellers sell a house to the buyers, buyers move in on closing day. So if you see solar panels, or there's renters or vacation renters coming in the future, you know, call the hotline, talk to your broker in charge, get the closing attorneys involved. All right, so we'll see people are typing into the chat some ideas what they think might be some. So I see earnest money disputes. So if we're Family Feud, again, ding, ding, that would turn over probably. Let me see which one that would be. It'd be up there, probably up there at number 4, number 5. So Karen Kitzmiller gets some points there. Kind of the hottest topics we're dealing right now is kind of number 8 and number 7 combined. That's kind of, you're in a red hot market. You're probably seeing multiple offers on the same property fairly quickly after it goes into the MLS. So some of the issues we've seen, Karush talked about LLR forms, the offer rejection forms. That's, so say you're a listing agent, you get a property, you list it, and all of a sudden you get, 30 offers on day one. So at that point, you probably want to go to your seller and have a conversation. Hey, sellers, we got a good problem. We've got 30 offers on the house. So we've got some options. You can counter one of the offers. You can accept one of the offers and lock them in. Or we can do maybe a highest and best, where we give them, say, till Wednesday at noon to bring their highest and best offer. Now, the disadvantage of highest and best, they might go buy something else, but in this market, that's not likely. They're probably going to compete with each other and try to increase their offers. So we can go back to everybody, give them an offer rejection form, which is also form SCR 314. Sounds like it's going to be in your sky slope soon, where you reject all 30 of them and say, and you could even use the SCR multiple offer form, which is the SCR 312, which basically says, hey, you pick a date and a time. So say Wednesday at noon, bring your highest and best offers by electronically to the RE/MAX office to this email address. And so a lot of times, if you're on the buyer agent side of things, you might be trying to do some things to try to get an advantage in multiple offers. You might, skip a bunch of the contingencies, right? You might skip the appraisal contingency, the finance contingency, some things like that, even inspections, which, as you heard from your E&O folks, that's not a good idea, right? Because one of the ways you get sued is a post-closing, the buyer gets the house, and then they find out something's wrong with the house and they want somebody to pay for it. And they come looking for you or the sellers. So, but we've seen buyer agents, they might use as is and forego inspections and repair procedure and due diligence. They might use escalator clauses. So escalator clauses, our forms committee in South Carolina has not designed an escalator clause. So you need to have an attorney draft that. You may already have one in your RE/MAX library for an escalator clause. Is kind of the classic. I'll pay $1,000 over the next highest offer, up to $500 and $1,000, something like that.
And Byron, we've chosen as a firm not to do that because it's problematic in North Carolina.
Okay, so that works in North Carolina, but in South Carolina, the problem we see is as realtors, sometimes they try to copy what they see without really thinking about it. So they might see a realtor use an escalator clause and then try to write it themselves. And that can create some unauthorized practice of law, felony crime issues. Unauthorized practice of law is also an ethics violation under Article 13 of the NAR Code of Ethics. And if it blows up in your face, it could get you sued and obviously upset your client. So just be aware of some of those issues. Never write a phrase or sentences into the contract without your broker in charge and brokerage attorney signing off on those, or at least contacting one of the hotlines, either the North Carolina or the South Carolina hotline. All right, and so you guys aren't very competitive. I don't see any more people guessing what could be in the top 10. So we'll just keep pressing on. So number 6, copyright issues. So things we've seen with copyrights, NAR is dealing with a copyright issue for a floor plan. Oh, somebody did guess it. With a market red hot and buyers forfeiting rights, including appraisals, inspections, repairs. What future problems we'll be facing as realtors when the market softens and some owners are upside down or discover issues that only would have been discovered in inspection. Outstanding, so ding, 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 you got number 7 right. And we talked on a little bit, right? We talked about foregoing inspections, and then, something's wrong with the house afterwards and they file ethics against you, file license law against you with the real estate commission. They hire a lawyer and sue you. So you want to have the SCR contract talks about inspections, talks about appraisals, talks about the seller disclosure, talks about repairs. So hopefully in the SCR forms, the buyer agency form and the listing agency form have some limitations of liability. On the listing side, it attempts to limit liability to the commission you would have earned. And there's an indemnification clause in the SCR contracts, the agency contracts, where the seller would have to indemnify the listing agent, the buyer would have to indemnify the buyer's agent. Hopefully that would help with a lawsuit, but a lot of lawsuits don't go to court, right? They settle out of court. So at a certain point, your E&O insurance and your lawyers and your brokerage may decide hey, you need to write a check to your client just to make this go away. So but that's a good point about overpaying, right? So in red hot market, these buyers, we get reports of buyers putting offers on houses without even seeing them. They're moving here from New York or something like that, and they just slap offers against the wall, hoping they'll get the house, and then say in the future the house wasn't really worth that, right? So you want to try to protect yourself. Tiffany was talking about North Carolina has a professional services agreement. We've had a draft of one for about 5 to 6 years. The Forms Committee is working on. They saw the North Carolina one, so you might expect South Carolina to come out with something like that. It basically says, hey, we recommend you get all these inspections, and then the buyer can initial the inspections they want or do not want. It'll actually help you remember to order the inspection. It's a very long list. I keep a running list of types of inspections, and I probably got 30 inspection. You always think of the classic home inspection, the classic HVAC inspections, the classic, CO 100 termite inspection, roof inspection, electrical plumbing inspections, but about pool inspections, air quality inspections, structural engineer inspections, private investigators to look around the area for any kind of criminals that live in the area or sex offenders that live in the area if that's important to a buyer. Basically anything a buyer could want an inspection on, there's probably some expert out there. So it's important to remember that real estate licensees are not licensed or trained as inspectors. So your job is to say, hey, buyer, we recommend you get all these inspections. And here's a list of a whole bunch of them. And you tell us the ones you want and don't want, but you're not a surveyor, you're not an appraiser, you're not a home inspector, you're not HVAC expert, so you should not opine on any of those. Just recommend that the buyer get an expert on those. But those are all valid concerns about sight unseen buying a house. One of the ideas to use the South Carolina due diligence, which operates much like North Carolina, where the buyer has a time frame to get their inspections done and can get out if they need to, with notification and maybe a termination fee. To try to protect unseen buyers. But we're getting reports of buyers buying sight unseen, as is, waiving all their inspections. And that sounds like a recipe for disaster. So just be very careful if that comes up. Talk to your broker in charge, talk to your brokerage attorney, call the hotlines on those. All right, so we're getting a little bit of competition here. So we got Helen Honeycutt says survey. So that actually is our next one. So good job, Helen. Number 6 is copyright. NAR is dealing with a copyright. There was a home builder that's suing the listing company. The listing company never even saw the actual floor plan. This is a house that was built, in the 1990s and has been sold 2 or 3 times. And they made a sketch like you probably do, right? You probably measure a house and you have a piece of paper and you kind of sketch it out and maybe use that sketch in your marketing. Maybe use one of these 3D camera things that takes pictures of rooms and with lasers figures out and builds a floor plan for you. So floor plans could actually be a lawsuit. Other things that we've seen copyright issues, primarily we see, we had surveys were a copyright issue years ago. The surveyors were basically arguing, hey, we have a copyright in that survey, and you put it on your multiple listing advertisement, which went out to thousands of IDX websites all across the country. So we want a big pile of money from you for violating our surveyor. We were the intellectual force that created this survey. We own the copyright to it, so we're going to sue you for a bunch of money. Luckily, we were able to get them back down because we talked to the surveyors and said, hey, you realize you're about to bite the hand that feeds you, because you start suing realtors. They're kind of the gatekeepers about, who do they recommend their buyer hire a surveyor. So they kind of back down after that. But we hear a lot about photographs. So say you're marketing a house on Lake Wylie and you just go to Google search and you find some nice images of the dam at Lake Wylie, something like that. And you just, without authorization from the photographer, use this in your advertising. You put it into your ads, you put it onto your MLS listing, and that goes out to thousands of websites all across the country. Well, these professional photographers can embed metadata into their pixels that you can't see, but the computer can see. And then they use these robot crawlers that crawl over the internet, find out whoever's using their photograph, and then their law firm sends you a letter that says, write us a check for $5,000, or we're going to sue you for copyright violation. So always, if you're using a professional photographer, get the license. Never just use photographs that you don't have the license to use on the internet, because a lot of these photographers will license the photographs to you for use, or you can create your own photographs, right? You can bring your own camera. And so we'll see what else is coming in the chat here. So I see kind of related to this, W Maxwell says drone shots and videos. That's another good one. So that's related to copyright and even spills over into FAA rules. So you might want to use a professional drone photographer. We've had some issues with drone photography where the drone kind of captures the neighbor's property in the shot. The neighbors create some issues about that. So you can always get the drone photography to blur out some of the neighbors if they show up on there. And then Andrew Wells brings up an issue that's topical to all of you all, environmental concerns such as the new Indy paper plants. A lot of times I see on the news up there in Rock Hill, Charlotte newscast, where they're talking about, I saw there were recently protesters because of the, I guess it's a sulfuric acid smell that sometimes, because I grew up in a paper mill town, and the whole town basically had that smell to it back in the days before some of the environmentalists were able to get some filters on the smokestacks. So on the seller disclosure that Karush was talking about, the government form, the residential property condition disclosure statement, there's a question about atmospheric issues. So in my opinion, a seller in your area, if they have any knowledge about this new Indy paper plant issues, they should disclose that under that question on the residential property condition disclosure statement about atmospheric issues, and then let the seller disclose. And then you use that seller disclosure in your advertising on your MLS and present it to buyers before they sign the contract as a way to kind of risk manage your risks on that paper mill issue. And then, so related to what I was talking about, the surveys, Virginia Edie was talking about, so we should not put seller provided surveys on the MLS. So, so like I said, the survey is back down. This is years ago on their lawsuits because they realized they would be suing realtors. However, just like, remember when I came on there, I said it's November 15th. So this information's accurate as of today, but the minute we hang up from the Zoom call, things may change. So the same thing with the survey, right? So a survey is a snapshot in time. And the survey might, you know, say the survey was done, say it was done in 2020. And then during 2021, a neighbor built an encroaching fence onto the property. So you got to be very careful about surveys. If the seller wants to attach a survey to their seller disclosure, that's the seller's document. So that's one way you could risk manage this. You could have the seller attach a survey to the seller disclosure. And you can use even the seller disclosure to design for residential transactions. If you're commercial, if you're land, you can still have the seller use that seller disclosure because the questions are all good. Obviously, some questions about structures might not fit land, but these environmental issues would fit into land. And I've seen other states with land disclosures, and all the questions on the land disclosure are inside that South Carolina residential property condition disclosure statement. So surveys you want to be careful about, because if you're putting that out there and that survey's got a problem, so like I said, a fence has been built, now encroaches, and I buy that property, I might say, hey, I was relying on this survey you gave me, and I'm going to sue you. And even though our contract, the SCR 310 says, you know, you're not relying on anything outside this contract, even defending yourself's got some cost and, you know, and time and worry and risk of loss and lawyer fees. So if you have a question about surveys, contact the hotline, contact your broker in charge or your broker legal counsel. So Dan Tila says short-term rental information, anything you pay attention to. Right, so short-term rental, that ding, 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 that was kind of the ones we talked about red flags, right, in number 9, where if you have renters or vacation renters, get the closing attorneys involved to make sure those rents, prorated rents, deposits, because some buyers may want the tenant, right? Say I'm an investor, I want to buy a property up in your area, and it's got a tenant in there, I want the tenant to remain, you know, that's perfect, but you need to get an attorney to alter the contract. Remember, the standard form contract requires the seller to deliver a vacant house so that theoretically the buyer moves in on closing day. But there might be buyers that want that tenant, or might be buyers that want that vacation rental. Say around, I guess, your area, you know, the PGA, when they come to town, you might have some vacation renters that want to rent out by the Quail Hollow Golf Course. So I might buy the house and want some vacation rental income. So It just varies. That's why it's not in the standard form, because there's so many different ways to handle short-term rentals and vacation rentals. But it is an issue for realtors because the standard contract says the seller is going to sell that house vacant and free of encumbrances. So if I buy the house, I move in, and then I find out there's a vacation rental coming up, you know what I'm going to do? I'm going to hire a lawyer and, you know, sue the seller, sue the listing agent, sue the buyer agent, sue the brokerages. And even if you defend yourself, it's got some cost, and I'm upset. I'm going on social media and telling everybody what a bad job my agent did. I'm not referring future business to them. So that's a red flag. And then related to copyright, Martin Burson asks, is Google Earth included in the copyright? Yeah, I would not use anything on the internet, any images from the internet, unless you get permission to use those. And I imagine getting permission to use a Google Earth image could be pretty difficult to get from Google. And then Linda Neal says, so don't add surveys to the multiple listing service. That's tough if you're selling. Yeah, I agree. So what you could do is, hey, seller, you're using a residential property condition disclosure statement to fill out all the questions, because it asks questions about land, about environmental, access to utilities, et cetera, that are applicable to land. And if the seller wants to attach the survey to the seller disclosure, then you're covered. You can advertise that. And if something bad happens, hey, I didn't put that survey in, that was the seller made that part of this, the residential property condition disclosure statement. Or you'd say, hey, Byron, I make more money by selling that land, and I'll just take the chances something's wrong with that survey. So I'm not going to listen to that portion of risk management. I'm doing a risk management reward. I think I can make more money. And that's a minimal risk that I'm going to take, because everything's got a risk, right? The only way you would have zero risk would be not to practice real estate, and then obviously you're not making any money. So everything's a risk reward on a sliding scale. And then it says, what about posting surveys from courthouse records? So the same issue comes up. That's actually where when the surveyors talking about suing, that's where those surveys were coming from. The realtors were pulling them off the courthouse. So just you know, do a risk reward. I didn't mean to get you guys too focused on surveys, because I don't think it's a high risk anymore. Like I said, the surveyors back down, but I did want you to make you aware. You know, copyrights are an issue, especially from photographs. And NAR is dealing with this gigantic lawsuit in another state about floor plans. And theoretically, surveys could fit in there. And then surveys, they're a snapshot in time. So if you're presenting a survey as some sort of representation about the property, and there's now a survey issue, that's going to get you potentially in a lawsuit. All right, so move on to the next one. Number 5 is teams. So teams are a hot issue. You may have teams in your brokerage. And teams have been around forever, right? So if you, even informal teams where you had, hey, I need somebody to cover my open house because I'm going to my kid's recital, or you had somebody in your office covering for you while you're on vacation. Those are basically informal teams. So, but teams have become much more organized, and there's some advantages to teams. You can put together a team of people that have different skills, right? So say you're good at getting a listing, but you're not good at showing. So you might hire a buyer agent for your team to handle showings, and you're good at listings. So those are some examples with teams. And then just like the informal teams, you know, you get sick, you want to go on vacation, you don't have enough time in the day to handle all the business that your prospecting is leading to. Teams can help cover that, but you have to keep in mind that teams don't replace your broker in charge. So even though you're in a team and have a team leader, you're still under your brokerage, your broker in charge. And so all your advertising in South Carolina has to have your brokerage name in conspicuous, you know, on the sign. In other words, you couldn't have your team name in giant letters and then your brokerage very small on the corner, because the public wouldn't know how to get in touch with Tiffany to get some sort of issue straightened out. So the other thing with team names in South Carolina, the Real Estate Commission, they don't want you to give the false impression that you're standalone brokerage. So teams can use team in the name. So they could say Byron King Team. That's a good team name, but you can't use the term real estate, realtors, or realty in your team name. So do not use real estate, realty, or realtors. Realtors obviously is a trademark from the National Association. You can be able to use that in your team name safely anyway. But a lot of teams use the term real estate, realty, and those are two no-nos. And the best is to use your name and the word team, and with your, you know, with your RE/MAX company designation as well. Also in teams, You want to get a team agreement. So just like when an agent leaves a brokerage, they call the hotline, hey, Byron, I left. What happens to my pendings? What happens to my compensation? And I'll say, well, do you have anything in writing? And a lot of times they'll say no. So you want to get that in writing. Same thing with teams. I'm starting to get calls now where, hey, Byron, I'm leaving the team. What happens to my pendings? What happens to my leads? What happens to my files? What happens to my compensation? You know, I said, do you have anything in writing? And a lot of times the answer is no. So you want to get that in writing, cover all the issues, basically almost like a prenuptial agreement, because you want to get that when you join the team, when you join the brokerage, everybody, there's goodwill between everybody. Everybody's excited about working together. Because when you're separating, you're dealing with human beings. There could be ill will or hurt feelings, and you want to have all that in writing in case you have to go to court to get it straightened out about access to files, what happens to pending, especially to your compensation. And Jennifer Ryan asked about surveys reported at the ROD, so that's the same issue. I didn't want you guys to get wrapped around the axle with surveys, but photographs, if you remember anything about copyright, think photographs, don't worry so much about surveys. And I got about 4 minutes. So I got 3 things. So number 4, fair housing. That's emotional support animals. Somebody's got an emotional support animal. That's a disabled person needs the animal assistance. Let them in. Buyer agents with love letters, listing agents with love letters. That's the in a multiple offer. Try to get an advantage. Hey, I love your house. My kids would love the house. I can envision us coming downstairs Christmas morning in the nice den. You want to avoid all that description of the buyers because all those are protected classes, right? Race, color, religion, sex, national origin, familial status, disabilities, gender identity, and sexual orientation. If you're renting, if you're a property manager and you ask about crimes, you also ask follow-up information such as any mitigating information. Have you a clean record since? What was the crime for? And you can still not rent to them for safety issues. But if somebody had a simple marijuana possession 40 years ago and they've had a clean record since, you probably cannot keep them out of the housing without it being a fair housing. Because if you look at our prison population, there's argument for disparate impact on race and color and national origin. Number 3 is safety. So be careful out there. Realtors have been attacked, assaulted, murdered in other states, and some even unfortunately in South Carolina. So use common sense, try to meet the clients if you never met them, try to get them to come to the office, introduce them to folks, because the criminal's looking for the easy mark. They want to make sure that they're kind of anonymous. So if you have them introduce folks, take a pic, you record their license, their tag number, and their vehicle, it makes it harder for them to attack you.
Byron?
Yes.
Can we do the last one pretty quickly? I hate to cut you short, but we've got one more group after you, and we do have a hard stop at 3 o'clock. And I don't want to shortchange them. I'm sorry.
Yeah, I'll do it quick. So
Okay.
Number 2 is ethics. So remember, you got to get your ethics done, your 2.5 hours done by December 31st. Related to fair housing, NAR's got training online for fair housing simulator called Fair Haven. There's a video on bias that you can watch to try to detect your own biases. You can get the At Home with Diversity certification at a discount from NAR, and they've got the Commitment to Excellence online program. And then wrapping up, professionalism, that's the number 1 complaint we get on the hotline on all our surveys, that realtors are not being professional to each other. So be professional, don't curse at each other, don't yell at each other, everybody. And if you're too in the heat of the moment, get Tiffany involved, because a lot of times if there's somebody detached from the situation, a broker in charge, they can, without the passion and emotion, talk to the other broker in charge and try to de-escalate the situation.
That is definitely true. And that actually goes right into our next point, which was ethics hearings and professional standards boards. And our own Scott Tony is going to talk about that. Byron, thank you so much for being on with us today. I'm sure we have plenty of other questions. So I'll ask everyone on, if you have questions, send them over to me. I'll get Byron to answer them. And in our session tomorrow, I'll give you updates on anything else that we needed to add for Byron.
Okay. Thanks, Tiffany. And if anyone has questions, if we run out of time after I present today, you can contact me directly or go through Tiffany or Haley and we'll compile some answers. And I just wanted to give a quick overview of how the Professional Standards Committee works. I'm chairman of that committee, and we hear the ethics violations that are filed from by a member against another member, and a member being a Canopy member or a realtor. So real quick, let me just give you a little bit of a background of how the various arms of this work. The first thing you can do if you have an issue with another agent is you can go through the Ombudsman program that's available to you as a member of the North Carolina Association of Realtors and Canopy. I'm an ombudsman as well. And what we do is it's a program that's simply set up to provide some informal telephone mediation. The ombudsman listens to an agent's concerns, reaches out to the other agent, and tries to help resolve this before it goes any further. So that's quick on ombudsman. Next would be mediation services. We offer mediation services to our members. Trained mediation officers will meet with both parties to the dispute and try to help them reach a resolution which they both agree on. And that would happen before a formal complaint is filed. Next would be arbitration services. If you have an arbitrable matter, and that's when you have a dispute about a commission, you would file that arbitration dispute with Canopy. There's a $250 fee to file, and there's our online forms that you can access to file the arbitration request. The grievance committee, which is a separate committee, that's part of Canopy. They're kind of like a grand jury, if you want to think of them like that. They look at what's presented to them, and if on the surface they determine that that's a matter that can be arbitrated, or when I talk in a little bit, a matter that can be forwarded to the Professional Standards Committee for an ethics complaint, they send it forward. If the grievance committee sends the arbitration complaint forward, it's heard by the Professional Standards Committee, which is comprised of the chairman, 2 other realtor agents who are a member of the committee, 2 attorneys that are on staff with Canopy, and then it's recorded if it's on Zoom, or if it's not on Zoom, we have a stenographer that takes down all the notes so that we have a record of it. I would just give you one advice about arbitration. And again, arbitration is strictly for a money dispute. Think long and hard before you file for arbitration, because it's an all or nothing process. One party will get 100% of the commission and one party will get nothing. And it's not, as you may already kind of guess, when you have a commission dispute and you look at an uninterrupted chain of events or buyer's agency, who had one signed, who didn't, when you look at all those factors, it's not always black and white, and it may not always seem fair. But once you give it to us and you ask the Professional Standards Committee to arbitrate, one party will get 100% of the commission. So we always work very hard to try and get the parties to mediate before they go to arbitration. I went through all that super quick. I'll welcome questions at any time. You can call me directly. But the main reason I was asked to speak today was to talk a little bit about the Code of Ethics and how it relates to ethics violations and complaints. So as most of you know, the National Association of Realtors has a Code of Ethics that we are all to follow. And that Code of Ethics is made up of articles that we must adhere to. Our duties to our clients and customers, our duty to disclose things that we know, to not interfere in agency relationship agreements. There are actually, all of those articles are found in Canopy. There's 17 of them. And if you need help finding the Code of Ethics or the articles, I'm happy to help anyone. And anytime that you as a realtor member suspect that someone else has violated the National Association of Realtors Code of Ethics, it's your duty to file an ethics complaint with the association. Anyone can file a complaint, including members of the public, and we do hear cases where a member of the public has filed against an agent. If you feel that a realtor agent has violated one of the Code of Ethics articles, you have to submit a request to file your violation that goes before the grievance committee, and you would be the complainant. You have to add a respondent. You have to provide supporting documentation, answer certain mandatory questions, and submit it for review. What I would suggest is that if you are filing a complaint, it's probably something that's important to you, which is why you're doing this. So be as detailed as possible in your complaint and cite the actual article from the Code of Ethics that you feel someone is violating and give clear evidence as to why. It helps to, when you submit evidence, you can have copies of text messages, of emails, of voice recording, but try to make it easy for the panel because it's a lot to sort through. So you don't want to give us 200 pages of emails that are not in chronological order and expect us to really understand what's going on or to sort it out. When the complaint comes before the Professional Standards Committee, again, it's going to be heard by, unless it's a RE/MAX associate, it will be heard by me as the chair. There'll be 2 other panel members, 2 attorneys, and we'll be recording, or if it's in person, a stenographer will be there. You will have an opportunity to present your case. The respondent will have an opportunity to ask you questions. The respondent will present their case. You as the complainant can ask them questions. The panel can ask questions at any time, and then both parties have the opportunity to give a closing statement. When a realtor is found in violation of the Code of Ethics, there's an automatic $1,500 administrative processing fee, but we can and we do impose other sanctions, and it includes, but it's not limited to, requiring you to take an educational course at your expense, additional fines up to $15,000, and suspension or expulsion from the Realtor Association or Canopy. So it's pretty serious business. You want to make sure if you file a complaint, you do it right, but even more importantly, you don't want to be have a complaint filed against you. And let me just give you 3 quick examples about the top 3 complaints that we see. One of them would be Article 2, realtors shall avoid exaggeration, misrepresentation, or concealment of pertinent facts. We get a lot of those. A lot of them center around a property was under contract. It came back on the market. The agent does not disclose what was found on the previous inspection report. And the agent will tell us, they'll be like, hey, my seller told me not to give you this report or told me not to disclose. But once you as an agent are aware of a material fact, even if you're instructed not to disclose that material fact, you must do so. And also, just as a side note, you cannot give the inspection report to the next buyer without the permission of the buyer that bought the report originally, but you do have to give those findings to the person. Second most common would be Article 15, realtors shall not knowingly or recklessly make false or misleading statements about other real estate professionals, their business, or their business practices. I've seen a bunch of these. 2 examples is a realtor went on another realtor's website and wrote defamatory comments about that agent because they had a transaction together that wasn't very pleasant. A specific example would be a buyer's agent was frustrated with what he viewed was a very slow response time from a listing agent that worked for one of the big I firms. And so while copying the seller and writing the listing agent, he wrote discount brokerage equals discount service. And that was found to be a reckless statement because you can't make a blanket statement against another professional that just because they're discounting their fee, they're giving you inferior service. The last of the 3 of our most common would be realtors shall not engage in any practice or take any action inconsistent with exclusive representation or exclusive agency relationships. So we see a lot of these where a buyer's agent takes on a new buyer and really doesn't do his or her due diligence to make sure they don't have an existing agency agreement. And 9 times out of 10, a lot of clues are there because the buyer will say stuff like, hey, my other agent couldn't get me a house. We're frustrated with the other agent. So the new agent will say, well, did you sign an agreement? And they'll say, I don't know, or I don't think so. And the new agent just leaves it at that. And you really have to press hard when you're in those situations to make sure you're not violating exclusive agency agreement. Another one that we see is you do determine that your new buyer has an existing agency relationship, but you provide them advice on how to break that agency relationship, which is a big no-no. You cannot do that. You have to refer them back to whoever they're working with. One agent actually prepared the termination form on behalf of the buyer to present to their old agent. And that was obviously a violation. And then quickly, the last thing I would say is that the Professional Standards Committee does is we hear MLS violation appeals. So an example of an MLS violation would be you scheduled, and this is a real life example, someone scheduled 7 appointments. They only scheduled the appointments in 15-minute windows. So they were arriving at each house at all different times and none of them within the correct window. And the listing agents filed a complaint because their super box showed that they were showing the home outside of a scheduled confirmed appointment time. And the agent who had the violation, it wasn't a very big dollar amount, but she appealed to us and we upheld the decision by MLS. And in reality, this is a person that went to 7 different homes, was late for every appointment, was assessed a modest fee. But when she appealed it, she required 3 panel members, 2 attorneys, a lot of time and expense for something that, she was wrong. She should have just paid the $150 fine. So, when you get those fines, kind of look at it. If they're fair or deserved, it's probably in your best interest just to pay it. But if you feel that there's a real appeal there, then certainly bring it forward. So that was pretty quick. If any of you find that you're in a situation where you have to file a complaint or a complaint has been filed against you and you have questions or need any assistance, you can always feel free to reach out to me and I'm happy to take any questions if anyone has one.
Haley, are there any questions in the chat?
So I see that Byron wrote about due diligence.
We'll actually take that up a little bit later, Haley.
Okay.
We can do that. We'll finish that up tomorrow.
Got it. There are no questions so far for Scott.
Great, thank you.
Scott, you did an outstanding job. Some of the things that you brought up, I think we were all thinking about or wondering about. And so bringing those up was key. It looks like Bala did just add something about if you exceed your showing time by 5 to 10 minutes and still in the driveway, is that a violation?
Yeah, so there's a standard of reasonableness that is applied to these violations, and typically it's a 5-minute window. So you really shouldn't be on the property at all once you're outside of 5 minutes of your showing time, and that would include being on the physical property, not necessarily in the structure.
Thank you very much. I'm sure that we all will have many other questions, Scott. So I'm sure you'll be getting questions. And if you get some really good questions this afternoon, if you wouldn't mind sharing them so that we can just bring them up tomorrow and remind everyone what those were, because you really had a great presentation today. And I'm sure it's got everybody's minds wondering and thinking through the process.
Thanks.
Okay. So to wrap it up today, I just want to thank all of our presenters for taking their time and all of the agents and realtors on today for listening in. We do have another session tomorrow, and no, it is not a repeat of today. Even more information, 2 hours, 1 to 3. And the topics for tomorrow are going to be wire fraud again, cybersecurity, the top 5 complaints with the realtor boards, then the escrow funds disbursement, using negotiations and how to diffuse situations, and the proper way to handle E&O pieces. Again, thank you guys so much for joining us today, and we look forward to seeing you tomorrow with even more content. Have a great day, and again, thank you to all of our presenters.
Thanks, Tiffany. Bye,
Thank you,
everyone.
Haley.
See you tomorrow.
Thanks, everyone.
Bye, Karush.
Bye.
Bye.
Bye, Shay.